Welcome back. Make sure you guys podcast. This is a re-recording, April 10th. We had some technical difficulties, but we
Steve probably had the SD card in his pocket, fell into the crack of his car seat, landed in a puddle of coffee, and then here we are.
What's good about this topic though is like we can. This is something that like stuff keeps happening.
Anybody hear this? Do we have some WD-40 in the office?
Yeah. This is a topic that's constantly evolving, so it's actually kind of good because now we have more up-to-date information.
Yeah, what are we talking about?
We are talking about wars, geopolitical shocks in the stock market. Essentially, should you be worried about the Iran war right now?
When did we record?
2 weeks ago.
Well, yeah. It
How much has
might have
changed?
worked out that we recorded the before.
Right before the quarter ended.
Right. So at the time when we recorded this, the first time, it was very scary.
Bad. Yeah.
Right?
I'm looking at the
Markets were-
charts right now.
Yeah.
We've like almost
We're all the way back.
fully recovered.
Yeah.
Right.
Yeah.
Why?
Why?
I mean, what did I say that famous quote from George W. Bush? Fool me once,
this is
can't
crazy.
fool me again. I think, dude, the investors, the market is telling us that the entire conflict in Iran is done.
Yeah.
And I am personally not a believer of that.
Or are they just ignoring it? Like, is the market just ignoring it?
Well, I think the market was worried about oil prices for real.
Yeah.
Right.
And so if oil prices are not going to be an issue, then the market doesn't care.
Yeah, it's crazy.
But looking at the chart year to date, so S&P 500 is now down only 0.1% year to date. And at one point in time, it was like 8 or 9.
Yeah.
And that was like around the time we recorded the last episode.
Yeah, the floor was down 9.
It's kind of wild too. Like 1 year ago basically to right now was the whole tariff shock and that big drop. And then it recovered. It's been like V-shaped recovery after V-shaped recovery. Not that we're out of the woods yet on this one, but
Right.
I mean, it's a perfect V. Look at that red V.
That's how low it went? Wait, what's that price that it was down in April?
It was
6,300?
6,300. So almost 10%.
It's always something. That's really what you should be thinking as an investor. I think it's very interesting too. The older you're probably more conditioned to stuff like this. But the people who started investing in the last 5 years, I feel like got a lot of experience in a short period of time, headline wise, from 2020 onwards.
Mm-hmm.
Like, dude, I can't even really remember like certain world events or stock market things before 2020. And I was a little younger and I wasn't paying attention to it as much. Yeah. But like, still, can you? Wasn't there that time in 2018, quarter 4, something like that?
Is this when I have to remind you guys I've been in the business since 2008?
2018.
Yeah, you really have seen the worst of it. Yeah. What? How do you think this is compared to the banking, the housing crisis?
Oh, not even close. That was legit.
I didn't
even have like $1 under management at that time, but I remember watching advisors freaking out.
Yeah, could you imagine
office.
being an advisor when that happened?
I was.
It's so different, right? That's like in our country directly.
That was a legit big problem.
Yeah.
Right.
Yeah. The closest thing we've had.
Now,
to that
is
was
there
the
something like that happening again behind the scenes under something?
Well, there was. We had that banking crisis a few years ago, and the government just bailed everyone out.
Yeah, but not as bad as that, dude. They were.
I'm just saying, like that was the closest thing to it. Like that could have gotten really bad.
What are you talking
When
about?
was it SBC?
Yeah, the small.
Oh,
banks.
I remember that.
Small
Yeah,
banking crisis. That could have gotten really ugly.
but we just give them a bunch of money.
Hey, we learned from 2008.
Just
this is what
backstop
you do.
them, basically.
We got to put a backstop.
Yeah.
on. They
Yeah.
increased FDIC, all that stuff.
Well, we're talking a lot about random stuff that's happened, but this is just we're doing this episode to answer the question: should I be worried? Are you guys getting that from clients a lot? I'm not really.
Not really.
But I see it just everywhere. You know what I mean?
I think it's a great idea for us. Every time an event like this happens, and again, we're not out of the woods yet on it. Who knows? Like the war could continue on and it could be bad. But every time these type of things happen, we should do like an after action review of from an investor's perspective, what did we learn from this?
Do you think we kind of like it looks like we lose credibility though? Because every time something happens, we essentially just say, "Don't be worried."
Well, it's 100% the right thing to do.
Right? No, yeah, I know, but I'm saying like from someone's perspective, it's like we're not really,
they want us to be able to tell them, all right, now's the time to buy,
Right.
and now's the time to sell. But it's an impossible game.
Right.
I mean, if we knew that, we wouldn't be doing a podcast episode about that. You imagine if we knew when to buy and when to sell.
No. I mean, dude, it looks like the bottom's in. It down 9. You would have thought that it would have been.
Isn't that crazy though? Like
Did
you
we
wouldn't
do a
have said that 2
prediction?
weeks ago.
Did we do a prediction episode about where the markets are going to finish this year? Or was that last year?
No, that was last year we did that when I said they were going to be way down.
And I was right.
Yeah, you ended up being right.
Yeah.
But isn't that crazy? Like 2 weeks ago when we did this episode, you wouldn't have said the bottom's in.
I would definitely not have. And I don't. I mean, now I kind of think it is, but I don't know. It seems like that was too easy. It was too short lived.
I think the biggest concern in the market right now is all the uncertainty around AI.
We were talking
think
about this.
that's a much
we were
bigger
talking about
issue.
this
That's
yesterday,
been
but
coming to fruition.
Mark actually doesn't think that. After our quarterly yesterday, he thinks that it's the opposite. Because I said the same thing. I was like, is this something we should be worried about? You know,
When I say worry, I
allocations.
think I don't think anyone knows yet what is going to happen.
Mark said it's going to be a tailwind. It's going to trickle into earnings and it's going to be good.
It should be.
Right.
Yeah.
But then I could see a day in the future where maybe it isn't good, like in terms of
Valuation.
if prices all come down, if we are actually in a deflationary world, why would stock prices keep going up?
I think that it comes to, I think that the problem is if valuations for these companies because of AI become too bloated.
That's
But I don't think that's possible because I think the value they're going to return is going to reflect that. You know what I mean? I don't think it's going to be bloated to the point where like AI doesn't, like we're already seeing the effects of that it actually is working.
Yeah. So I mean, the argument would be that if prices come down, that part matters, but it's the most important is can these companies maintain their margins, and if they can, then
and I would think that
like if prices
I
come
feel like-
down, but they're coming down for multiple reasons. Like the reason I think this is a tailwind is because it's going to make these even large caps, but it's going to help small caps as well, and you're seeing that year to date in the markets. But
I love
it's
I love
driving
that
down
in
or
small
making
caps.
making costs lower. So we have to separate economy and stock market. It's really important to do that now because of the AI. Like we might see unemployment double. The unemployment rate might double at the same time as the market skyrockets.
Yeah.
And that usually that was for 5 straight years. Our key point that we watched on the portfolio management team was unemployment, because every time there was a recession, unemployment spiked. That might not happen this time.
Mm-hmm.
So
wasn't there some unemployment news that was really good recently?
they had a big beat last month.
Yeah.
Like they added like 177,000 jobs, or it was either 177 or 127. That wasn't expected. But I think it's a tailwind where you're going to start to see. So right now, Mag 7's getting crushed, or if you want to say top 10 companies getting crushed year to date. But everything else is picking up the slack, and I think we're starting to see these other companies become profitable already, and I think it's going to continue to happen. I don't know when what you're talking about happens, though.
Yeah, that's what I think that's like it for sure. Everything that you said, I would agree with that. For the foreseeable future, next couple of years, every company, like we're experiencing it here,
Yeah.
like we are experiencing efficiency gains like crazy.
Yep.
And I would imagine every business is, and we're still in like the second inning of all this.
Yep.
So there's like this era of efficiency gains, which should lead to better profitability.
Mhm.
But then somewhere down the line, and this is just what happens in business, is that people start competing on price.
Mhm.
And so you could see a war on prices basically,
Mhm.
and people becoming so efficient that they start to lower prices and then forcing other people to lower prices, which lowers potentially margins.
Yeah.
Maybe not, but that's like where I'm
Yeah.
wondering, like in 10 years, where does all this lead to?
Yeah, it's gonna be weird.
I also think like,
I think
so you could see layoffs happen, but think about how many new businesses should start from all this.
Mhm. Yeah.
It might be like the golden age of new businesses.
Yeah.
Like
Yeah, you could stand up a business overnight, website,
it's
everything,
wild.
payment.
It's
But
wild.
I think it's, if people hate big corporations now, they're really gonna hate them in the future. Like
I don't
5 years from
know.
now.
I think it's the opposite.
What if you've got I'll pick on Google. Google's profits everything stays, the trajectory of all of their revenues, everything still keeps going up, but they have no one working for the company. Are you really gonna?
I don't think it's going to be like that.
Are you really gonna like that company though? Like if they're down to it,
Yeah.
they've got 1,000.
But that's what's
people working for the
beautiful
company.
about capitalism,
Right.
and is like you can vote with your dollar,
Right.
your wallet.
But that's what I mean. Like if you don't like big, large corporations,
I remember
today,
it's funny. I was thinking about this the other day when I was at Walmart checking out. I remember when I was like in college, somewhere in that era, everybody started hating Walmart because of how they basically killed out
Yeah.
all the small grocery stores and
Yeah.
small stores.
Yeah.
Everyone hated them. That's like completely gone
Yeah,
now.
no. Why
No
don't
one
people
thinks
hate
about that
Amazon?
anymore. And so I could see, but I also don't think like Google is going to just fire everybody. I think they'll have like, it'll be crazy what they can do. But again, you can go and just start your own thing
Right.
and overnight.
they'll buy up all those.
What's this have to do with Iran?
Yeah, so I was gonna say, yeah, we love talking about AI. We're talking. Let me just throw some facts to you guys about other wars and how the stock market did. U.S. stock market returns during major wars. World War II, 20%. Korean War up 15%. Vietnam War up 6%. Gulf War up 10%.
Is that
Iraq War up 6%. Just
What's
the
like-
annualized return.
in the year of the war like happening or whatever? Like,
Yeah.
because
yeah.
the world. Okay.
Then market returns 1926 to October 2025, 10%. Now let's go into specific. So the biggest since, I mean, this goes back to what? 1941, which was the Pearl Harbor attack. The biggest max drawdown from a geopolitical event was the Pearl Harbor attack, which was down 20.34%. So 142 days until the bottom, and it took 300 days, so less than a year, to recover from literally the U.S. soil being attacked by shit.
And that's when you had to wait for the newspaper to come.
I know.
out
I was just
to
thinking
see
that. Can you
a
imagine if
strike
that
price.
happened now?
Right.
Holy
You got to
crap.
call your
dog.
broker to sell it.
Could you imagine if actual planes attacked somewhere in the United States? Dude, that
It would
happened.
be-
That, by
it
the
would
way,
be just as bad, if not worse, but it would be really fast. It
Yeah.
would be like the down 20 would happen in the first week.
The
Right.
market would
The
shut off.
recovery would be
Yeah.
back in 3
dude,
months.
this happened. It was,
Remember in
it was
COVID
like-
when it was like
Oh my
shutting,
God.
like the market was like,
It was. We got
what
those
they call
freezes.
it? Yeah,
dude, it was less than a year to recovery. So how much do you think the stock market was down the day Pearl Harbor attacked?
I don't know. Depends on how many phone calls people could get in.
You don't think there was no one on Snapchat filming it?
You had to literally think about that. You had to literally call someone to tell them to trade your account or whatever.
Dude, can you imagine if we had phones, hardline phones right now, and like something like that happened, and it's just
It's
hello?
ringing
and
off
then
the
you got
bar.
like
It's like,
people
I
like
can't get
17
in.
people.
Yeah. Wait, no. How much do you think it was down? I have the number. I'm asking you.
That day?
Yeah.
That day, I'm going to guess 4%.
Yeah, it was 4.
Was it really?
It was down 4% when U.S. soil was attacked
Yeah.
by another country.
It would be
We
way
Dude,
had-
worse.
markets are so resilient. It's crazy.
During COVID, we had down 8% days. I mean, there
Nine-
were some wild days.
On 9/11, it was down 5% that day. Dude, that's crazy. I feel like it would be down way, like, dude, there's 1-day returns nowadays that like if that
Is there
happened,
logic to this? Maybe people are panicking and they're not really. The first thing they think about is not their stocks.
isn't that crazy?
But
Is
why
there,
would what is it doesn't have much to do with businesses,
right.
really.
Is there any 1-day event that could happen to you guys as personal investors where you, Nate Elvers, would go to your investment account and be like, I'm
A
selling?
nuclear bomb,
Well,
and we
why-
wouldn't be here anyway.
That's what I'm saying. Like, yeah, would you even like bother? Oh, Detroit just got nuked. Time to log into Fidelity and sell my stocks. Like, there's no way, right? Like,
Oh, that I would, yeah,
really?
yeah. If nukes start going up,
Yeah, but what I'm saying,
I'm out.
Yeah.
I'm out.
Okay. So anything besides that, like, there really is nothing that could happen that would be like, all right, it's time to sell. I'm saying for you personally, you know what I mean? Like, obviously, telling your client is something different. I'm just curious.
I mean, I could see it too if you're like 70 years old or something like that. But like for us, it's
No, I'm saying Mark Temperato.
today.
Yeah.
Yeah,
if you were doing some speculative stuff, maybe.
yeah, it'd be like such a bad decision. You should do the opposite. You should be
Right.
buying that day.
Exactly. This what we remember we looked at sentiment yesterday
Oh,
and
yeah.
and so consumer confidence is through the floor. It's not even close to averages and we look at each other and we go, this is great.
Yeah,
Because that's usually what happens
sign.
is
That's
when
a good
people,
thing.
yeah, it's bad to think about it like that, obviously, because people are thinking bad. But from just a strictly stock market return standpoint, the stock market always has done well when people are fearful. Who even did that? Charlie Munger was like, be greedy when others are fearful and fearful when others are greedy. It's just like usually when the stock market does poorly is when there's euphoria around it. Yeah.
I don't remember the time frame of that sentiment chart, but it's the only 100% data we have that every sentiment trough, the market's been meaningfully positive. So unfortunately, like that was a big. Not unfortunately, I guess I love it. It's a pretty good leading indicator to positive returns.
Yeah,
people feel pretty crappy right now.
Yeah,
I mean, we aren't even close.
I'm
to
also
the average.
I'm really interested to see what happens with all this tax refund money too, and how that impacts things.
Are you guys getting a refund?
No.
Wow. Okay. So war times in the stock market, dude. There has been. I mean, think about this. There has been. I don't even know how many this is from 1928 to 2023. I mean, this bar graph is crazy. Everything we got: the Bosnian conflict, the Dirty War in '76.
Look at all the Middle East wars.
And
They're
this
like
is just
every 3 years.
all right, Mark.
They're literally every 3 years. It's
But
insane.
the line is straight up. It's crazy. Like essentially nothing can stop this. And you know, it's easy to say this in hindsight because you're a prisoner in the moment, especially when it feels like the sky is falling. But you have to do two things, I think, in my mind. One, if you're really worried about it, look at historical data like this. And then two, know your plan. If you review those two things, then you'll be able to stay the course, I think. Review your plan, know why you're doing what you're doing, and review historical data.
Yeah,
I think that's really well
I
said.
don't know if this is really on topic, but this is a diversification story where it's really working. So, like we were going through our portfolios yesterday, and why, like, I think I said to a client, I was like, it's crazy that we're sitting here and you're either down 1% or even up 1% on the year. I was like, I don't know how the hell that happened, but I do know how. It's from diversification. This is finally, and I'm really happy about it because if for the last, I don't know, 6 years at least, maybe even longer than that. Maybe you can go all the way back to 2008. You just had to buy large cap equities. Now you're getting paid to own specifically large value, mid value, small value.
Yeah.
International stocks finally.
Is value doing better than growth?
It is.
Year to date?
By a lot.
Yeah.
By a lot.
What's that all about?
NASDAQ was down because I have a little blip.
Yeah.
The 80% of the returns from the stock market this year have been from the Mag 7, and the Mag 7 has been down. It was like 11%. If we took out the Mag 7, the S&P 493, we'd only be down 1% or something like that. It was crazy. And that's just because I'm guessing there was that was
AI. Quarter one. Now,
Yeah.
Fast forward to today,
Yeah.
it's definitely positive.
Yep.
But yeah, it's all because of a sell off in the tech stocks.
Okay, guys. So here, this is, I'd imagine you guys know the answer to this. What do you think $10,000 turned into from 1970 to 2025 through, I mean, we got everything. The first PC was demonstrated all the way to the first U.S. budget surplus, U.S. invades Iraq, Deepwater Horizon oil spill. I mean, every single thing that could have happened in the last 20.
Horizon.
Oh, dude, there's a million things. I've never even heard. Some of this stuff's got to be made up. AI wins first
What did
chess match.
$10,000 turn into?
I mean, that's a
from
thing.
1970 to today.
Yep.
It's 55 years.
In the S&P 500 over the last several decades. This number can't be right.
Let's see.
It can't be. I refuse to believe this. And if you look at this chart and you still
Rule
think that it's
72. Are you
gambling,
rule 72 in it right now?
what is there anything that hasn't happened?
10%
since-
average. It's doubled every 7 years.
This is why you suck.
50
Just say an
divided by
answer. Don't-
7.
1.3 million.
No, you're not even close.
Low or high?
50
Higher.
divided by
Way
7.
higher.
High?
No, you got to be way higher.
55 years? That was 7 doubles.
1970. Listen, I got to be honest with you. I could be reading this wrong, but I don't think I am. I'm looking at the
2.6?
no higher.
No way.
I'll let you read the chart.
I'm calculating it around $2.5 million.
That's 8.
10,000 turned into 3.5 million.
Let me see this.
Yeah, check that out. Check that out, Nate. Right there. 10, 3.5, right?
Let me guess.
That's gotta be from
dividends
9.
reinvested.
That's
in
gotta
No,
be
it's assuming 11% for the S&P.
11%.
Okay, so maybe it was like every 6 years, so it doubled 10 times roughly.
Holy.
Yeah.
Holy moly.
So this is the thing is like, so in your mind, you if you look at this and you're like, no, I'm still gonna sell, it's because you believe what's gonna happen in the next 5 years was not seen on this chart. And there is every event on this chart. So like, unless you think, again, the world is ending, then you shouldn't sell. And by the way, if the world's ending, you didn't need the money anyway. I know I always say this, but it's just like, it's supposed to be a hyperbole to show you it's like the fall of the Berlin Wall. We got Reagan. We got space invaders. I've never seen this. And yeah, I mean, there's every single thing you could think of here.
If we got invaded by aliens, I'd probably sell too.
They don't care. Yeah, but you're done. You ain't.
That's what I'm saying.
Oh, wow. Fox News. We got the guys from Mercury invading New York. Nate's on Schwab trying to sell his stuff. Yeah, I mean, come on. No, you're not doing that.
100%. Man.
That's like your first ride time to go sell. Are you calling your clients to tell them?
No, I'm
heading to the bunker.
Judgment Day. Wait, actually, this is just a side note, and I see this all the time. If aliens do invade and they're like, "Hey, take us to your leader," like, who are you? Who we bringing to them? Like, if they're like, we need the aliens, you're like, we got
Elon. He's really
the leader of the human race is Elon.
He's the closest thing to an alien.
Dude, he would get us killed so quick. He can't even speak our own language.
Who would you say?
I don't know the answer. I saw a funny one. It was like
Jamie Dimon?
It was not one of those guys. It was like
a Bill Belichick.
Actually, could be the choice. If he was like, "Listen, bring us your representative," we're all just looking at each other like, okay, all right. So as I'm saying, so Space Invader trigger video, like everything has happened since 1970. And by the way, if you put 10 grand in the stock market, you have 3.5 million. You're not mad about it. So I just like, unless you right now are being like, Steve, I actually think the next 5 years is something's going to happen that's not on this list. I'm going to admit you in some sort of hospital, but then that's fine. Then sell. You know what I mean? So I don't know. I just think like it's very interesting to see. And it's good the stock market's been around for so long because there's just so many things you can point to where it's like, dude, it's going to be fine.
Yeah.
You know what I mean?
Yeah.
But it's easy to be a prisoner of the moment. And the one thing I will say that is different that you guys kind of alluded to is social media in the world is like everything is in your face. If you know what I mean? So it's easier to think doom and gloom and
anxiety.
panic than it was back then. You know what I mean?
Yeah.
Like you could have, like you
well,
said.
and some, I think too, I've noticed like, because of the access to podcasts and stuff, like I think some people think they know a lot more than they do too now. You think you can go listen to a podcast on investing, and all of a sudden you think you're an expert.
Everyone's an expert.
Yeah.
I was laughing Wednesday. I'll leave last names out, but Matt was over at the house, and Lindsay's in a way similar to Matt, where he was just like, "Yeah, I stay off all the social medias. I heard we bombed Iran." I'm like, that's all you know? like Lindsay has no clue what's going on over there. He had no clue. I'm like, actually, that's probably a really peaceful way to live. Like you just
social media.
Well, dude, I think if we weren't in this career, I probably wouldn't know either. Like I feel like I have to stay. You got to stay kind of correlated to events,
and then you can't miss it. That's the thing. It's like if you're
then how does she claim that she doesn't know?
Because she doesn't follow anything that's she.
Yeah, but it's still on you. If you go to your page, though,
saying like she really.
I'll
say so.
Oh, dude, I think that's way more commendable than us. Like, I think those people are way better.
We're not allowed.
100%. Wait, Matt, who?
Like a guy that's doing some work with the house. I'm getting a new deck.
Oh, you are?
Yeah.
Wait, out back? Mm-hmm. A new deck? You didn't really have a deck. It was more of a stairway.
Yeah, I can't believe we didn't do Max Your Dash moments. Who runs this podcast?
We just kind of went into it. Yeah. Mark.
I have a funny Max Your Dash moment. It's about Enzo. So Enzo just won Star Student of the Week, which they do a new Star Student every week. No, this ends poorly. So there's 20 kids in this class. It took over a year.
Do you think they were like participation trophy style? Like, all right, I gotta give him one.
What a Who hasn't got one in the last 53 weeks?
Jeez, oh my
Enzo
Lord.
Star Student of the Week?
He was so pumped about it though, so I was super happy for him. But it was hilarious. I was like, it took over a year.
Wait, this happened last week?
Yeah.
What a stud. Yeah, what's your joy score on that? So
5. That's a 5 check.
I love how you knew the scale.
So You want my max dash?
Yeah. Such a dipshit.
So I've been my max dash moment was yesterday. I finally was able to get on my new tractor.
Oh wait, Wait, you bought that a while ago and you never
It's
used
been
it?
too wet. It's been too muddy.
Oh,
So
nice. How is it?
It's dude, joy scorer is off the
Was
charts.
it worth all the money you spent?
Joy score off the charts?
Really?
Yeah.
Dude, that's the cool thing about Joy Score is like what brings you a 5 Joy Score would be Mark's personal hell. You know what I mean? Which is why that's so cool.
Yes.
Like your Joy Score can be what you want.
Yep.
My personal hell is putting things together.
Dude,
But I feel like
That's
you'd
my
be
first-
good
like
at
the
that.
sauna, you would.
I would not do it. There's no way I would do it. I hate doing it.
Wait,
Hate it.
it's
like
terrible.
when kids, especially like Christmas time, kids get like some Paw Patrol thing, and it's
Well, that's
75
nonsense.
Pieces. It's
Yeah.
75
That's
pieces,
nonsense.
82 stickers, and you're sitting there
Yeah.
like it drives me absolutely bonkers. That's my personal hell.
But that's someone else's Joy Score.
Yeah.
Like
That's
a 5.
true.
That's
That's
someone
true.
else's 5. They love putting together something for their kid. You're a scumbag. So
Wouldn't you kind of think that I would like Legos, for example?
no, that's what I'm saying. I feel like you would love putting stuff together.
Hate it.
Really?
Hate it.
Do you remember those little models I used to build? You wouldn't like doing that?
Oh, models.
You don't pay attention to what I do. All right, well, that's
Magnetiles are pretty cool though. If you play with those, do yourself some
Magnetiles?
Magnetiles, legit.
Yep.
What's your Max Dash moment?
I don't know. What did I use?
Can't use it.
What? I don't know, dude. Oh, I went for a run outside, the first one of the season. I hate being cold, so like I can't really like fight through the temperature, but it was actually really nice enough to run
How far did you
outside.
go?
2 miles. But it was in the morning. It was
How'd it
still
feel?
really nice. It was great.
That would make Ron proud.
Could you run?
What?
Like, do you think you could do like a marathon?
No.
Would
that's
you ever
bullshit.
want to do that?
No, those people are demented. But
right.
yeah, that was my Max Your Dash moment. So yeah, closing. Don't be worried about the Iran war. You know, the thumbnail of this and the thing is going to make you click on it to make you think you should be worried, but don't. It's not
Is that being performative?
exactly. Well, you know, you got to do things to get along. You know.
Maybe we should say, "Don't be worried yet." It's not over.
Yeah. No. I'm sure.
Boom.
All right.
All right, guys. Thank you for listening, watching the Max Dash podcast. We will catch you in the next one.
Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.